Hey folks, Vic here with your weekly trade video for Friday, September the 1st. Holy smokes, the year is slipping away on us here. I'm going to follow up on last week's video where we showed a trade that was filled on the New Zealand CAD pair, and where I challenged everyone to leave a comment on how they would manage the trade. Okay, like and we get into these trades, you don't know if it's going to be a loss, a profit, partial, like a mitigated loss or break even or whatever it is. So actually, nobody commented on how they would manage the trade, but since the video was watched, I don't know, about 300 times, I have to assume that some of the viewers are interested in trading, but maybe they don't know what to do once you get filled. So in this video, I'll go over the trade management, how this trade has worked out, what to watch for going forward with this trade, and which is still live as I'm recording this for most people. I'm recording it on a Thursday, so we'll see what happens. I really do hope that you like these videos. The only way that we can tell is if we see people hitting the like button. So, yeah, if you do like it, please let us know. Really appreciate it. Okay, let's follow up on this trade. Alrighty, let's take a close look at this trade. So, before I go here, by the way, I should mention that on this particular pair, you have what's called a positive rate swap, a rate swap in our favor. That means that the rate differential, the interest rate differential between the New Zealand dollar and the Canadian dollar is in favor of the New Zealand dollar. They have a higher interest rate. So the net effect is that you get paid a small percentage each day. Okay, so it's also called a carry trade. You can just Google it and you can get more information on it. So let's go look at this trade. And last week I set it all up and showed you the trade that Darko told all the members about way in advance. And this green, I left this green circle on. This is where the fill was, right down here, around 80, 33-ish area. And the initial stop was about 65 pips. It was below this low here. Okay. And after it waffled around, and here see it chopping up and down like this for quite a while. We had this nice rally that moved up here, took out all these swings in here, and came up into this level here and started to establish a pattern. This is what we want to see. See how we're making lower lows and lower highs here? Well, then we had this rotation, comes back down, and now we're making higher lows and higher highs. That's exactly what we want to see starting to happen. Okay? And the trade got up about 90 pips or so up into here, which is when that happens, we want to take some action. So let me just get to that right now. So I want to just tell you one thing. When price went up and retested this, you see the fill was in here and price went up and retested this level in here. When it did this, it was actually up a 1-to-1 reward to risk. Okay, this is something to watch for in terms of reducing risk or eliminating risk. It's a place where not only price had failed before, see in here, not only did it fail before, but once price got down there, got up into this level here, it was up more than the amount of the initial pit risk. So lots of reasons to get the risk out of the trade. So what does that mean? The question is, what does it mean to say to get the risk out of the trade? And this is where trade management can vary from one trader to the next. If you're just starting out with trading, we suggest taking profit on half your position once price is up 1-to-1, reward to risk. In this case, it was about a 65 pip risk, okay, down into here where the stop was, and it made over 65 pips reward. You can then move your stop. Once you get hit here and you take profit, you could then move your stop down to the original entry, which is down in here. That would have got hit actually right here. So you would have made your 1-to-1 on half your position and 0 on the other half. Okay. Or alternatively, you can move your stop up on the remaining position to under. You see the stop was below here originally. We go up, we get profit. You can move your stop, start moving it up underneath these lows like this as it's establishing higher lows. Okay. So now your risk on the second half is greatly reduced, and even if after taking profit on half your position here, even if price comes down and stops you out, this is still going to be a profitable trade, and you're giving yourself a chance for this, bigger move up. Okay, you're allowing yourself to stay in the game because this trade does have a lot of profit potential, like really big. So at this point, no matter how, and just to take a look at a bigger picture, let me just show you some other things here. This trade is based on the analysis that Darko provided for all of our members, and you can see what happened here. We had this huge move up on the weekly chart, and all of this choppiness on the way down is what we call a corrective move. And as price moves up into these levels, these are really big profits, okay? And let's hope that, we'll see what happens. This is Thursday as I'm recording this. When price closes for the week, that it closes a little more positively here. But in any event, when you start getting up into these levels here, you're making some really, really big pips. Like they're quite seriously big. So, and now you're getting into some very, very high reward risk trades. So no matter how you decided to handle this trade, okay, no matter what your decision was on handling it, this is going to be a profitable trade no matter what happens. And that's the main point I wanted to show you, is that, we have ways of taking these trades and managing them properly, because, you never know what the outcome is. So you have to be on top of your trade management game. This is really easy too. If you look at this, I'll just quickly touch on this before I cap this off. When you get into this trade, there's nothing to do. Sit back and relax. Set an alert up here where your one-to-one reward risk is, and there's nothing to do. Right? There's just leave it alone, and check in. Each candle is 4 hours. I mean, this is a few days in here where nothing's going on. So lots and lots of time on these long-term trades. It makes it very, very nice if you, I don't know, have a job or some other obligation. You can't be at your computer all the time. Okay, so in last week's YouTube video, I showed you where this trade was filled, and it was not profitable at the time. And of course, we had no idea if it would become profitable. Okay, that's trading. Once you get in, you don't know. It's out of your hands. But the setup was very good, and we know that it gives us an edge. Okay, that's the main point. And this is just a rinse and repeat formula that's been working over and over and over for many years, and that Darko provides for our members every single week. So I hope you found this useful and insightful. And and beyond that, listen, if you're not now consistently profitable with your trading, geez, I mean, we'd be honored to have you join our service. This approach to trading is time tested for many, many years. We didn't just come up with it yesterday, okay? And we are supremely confident that we can help you. So thanks so much for listening. Wishing you all a great weekend and week ahead. Take care.